Hey everyone, welcome to another episode of Investing Kev. The year is coming to an end, but there are still a few more episodes I want to release. In today's episode, I want to take a look at 10 favorite Chinese stocks that I'm interested in and will be investing in long term. My goal is financial freedom, and I believe these stocks will play a huge role in me trying to achieve that. This does not mean that the Chinese stocks that did not make this list are terrible. I think there are about 15 to 20 solid Chinese stocks out there, and this is very subjective and fluid. A company I like now may not hold true 6 months from now. If you haven't already, I released my 10 favorite US stocks in episode 41, so feel free to check that out. And in my most recent episode, episode 43, I talk about NEO and why I am bullish. If you like this content, please give it a thumbs up, please subscribe, and let me know in the comments what you think. Alright everyone, let's get started. These are the 10 Chinese stocks that I will be primarily investing in for 2022 and beyond. I have pretty much done a stock breakdown and analysis video on most of these stocks, so feel free to scroll on my channel and check those out as they're more in depth. I have slideshows I want to share with bullet points on what stands out for each stock and why I'm interested. The first stock is Alibaba, ticker BABA. What I like about Alibaba is the Chinese e-commerce sector. They're projecting that Chinese e-commerce retail sales will reach $3.7 trillion in 2025. As of right now, Alibaba has more than 1.2 billion users in their entire ecosystem. Their cloud sector is growing really fast. In the third quarter, they had 33% year-over-year increase in revenues. Their logistics sector, China, is growing as well. In Q3, they saw 20% year-over-year increase. They are diversified across different sectors. They are in retail, logistics, cloud, and new retail. What I mean by new retail is the focus on hypermarkets. These are stores such as your Costco's, your Walmarts, your Targets, where you can buy groceries and also have a department store inside as well. In 2022, Alibaba is expecting 20 to 23% expected growth. And with the rising Chinese middle class, they're going to have more disposable income that will benefit them to buy more stuff. The next stock is JD, ticker JD. What I like about JD is their efficiency. More than 90% of their deliveries are delivered in the same day or the next day. During their Q3 earnings, they had 218.7 billion RMB in revenues, which is a 25.5% year-over-year growth. JD continues to focus on lower tier cities with consistency and authenticity, and the entire ecosystem is within the company. From ordering to packaging to shipping, it's all contained within the company. And JD continues to expand their business. You have JD Properties, which is a subsidiary of JD, which focuses on infrastructure asset management and comprehensive property services. You have JD Worldwide, which is a cross-border e-commerce platform that enables Chinese customers to purchase products from other countries with the ease and convenience that they expect from JD.com. And then you have Jingxi, which is a social e-commerce marketplace that targets price-sensitive customers in smaller tier cities and rural areas. The next stock is Tencent, ticker TCEHY. What I like about Tencent is that they are the world's largest video game publisher. They own 100% of Riot Games, which is known for League of Legends. They own 40% of Epic Games, which is known for Fortnite. The entertainment industry in China is expected to grow massively. By 2025, they expect it to be a $436.8 billion industry. Tencent owns Tencent Music, which is the largest music streaming company in China. Think of Tencent Music as Spotify, but in my opinion, I think Tencent Music offers more than Spotify. And they also have Weixin, also known as WeChat, and QQ. WeChat is one of the biggest social media platforms in the world. The next stock is Baidu, ticker BIDU. What I like about Baidu is that they are the largest search engine in China. They are also one of the biggest artificial intelligence leaders in China as well. Baidu is focusing on autonomous driving through robotaxis. Their robotaxi fleet is growing, and Baidu is going to continue to be a huge player. Baidu currently leads China in AI patent applications. They have filed 9,364 artificial intelligence patents, and they've been granted 2,682 AI patents. By 2030, China is aiming to have a $150 billion artificial intelligence industry. There is no doubt in my mind that Baidu is going to be a huge player for the years to come. The next stock is NEO, ticker NIO. NEO just wrapped up their NEO Day this past Saturday, and I'm very excited about the news that they released. They are delivering their flagship sedan, the ET7, by March 2022. They are accelerating expansion in Europe, and they unveiled their new ET5. The ET5 is set to be delivered by September 2022. And by 2025, they will be in over 25 countries and regions, with one of them being in America. NEO is known for the battery swapping stations, and they currently have 733 total stations. Their goal at the end of 2022 is to have over 1,300, and they're also introducing a 150 kilowatt hour battery. This will allow drivers to reach a 1,000 kilometer or 620 mile driving range. And NEO is going to benefit from the rising EV market both domestically and internationally. The time is now, and a lot of countries are shifting towards renewable energies. The next stock is Uxin, ticker UXIN. What I like about Uxin is that they have the government backing of used cars. The government is reducing fees and making it much easier to purchase a used car. And also, because of the global chip shortage, the government is also trying to recycle used cars as much as possible. Uxin also shifted their business model and currently have their own inventory. They go out there and select the best cars to recondition and sell. They are also including new energy vehicles such as EVs such as Tesla and NIO and Li Auto. And they are opening a second superstore, which is going to be much bigger than their first one. Customers are able to go inside these stores and have a much more direct experience. and Bloomberg predicted that the used car market in China may grow to be a $306 billion industry. The next stock is Bilibili, ticker BILI. What I like about Bilibili is the industry. By 2025, the short video and live streaming market in China is projected to reach $134.3 billion. Bilibili was ranked 31st in Kantar Brain's top 100 most valuable Chinese brands of 2021, and they were ranked number 2 in the top 10 risers of 2021. From 2020 to 2021, they saw a change of 293% increase in popularity. In Q3, they increased their monthly paying users by 59% year over year. In Q3, users spent an average of 88 minutes per day. This is the longest in Bilibili history. And in Q3, they increased their ad revenues by 110% year over year. This is due to their brand name growing. And they also increased their revenues by 61% year over year. The next stock is Huya, ticker HUYA. What I like about Huya is the live streaming growth. They are currently considered the Twitch of China. They have an international presence in Asia, South America, Middle East, and many more through their international brand name, Nimo, N-I-M-O. They're increasing their game offerings alongside increasing content library. As of right now, Huya has the exclusive broadcasting rights to League of Legends for the next 5 years. In the third quarter, they increased their monthly active users by 14.7% year over year. They're currently at 85.1 million users, and their revenues in the third quarter grew 5.7% year over year. As of right now, there are 720 million gamers in China. 80% of those gamers watch live streaming, and 70% of gamers play esports games. And the second to last stock is XPeng, ticker XPEV. What I like about XPeng is that they have a solid vehicle lineup that is priced really well for the middle class. They continue to have strong deliveries and acceptance of cars, especially their P7, nearly every month and quarter. They continue to shatter record after record, and it's great to see. Just like NIO, XPeng is also expanding in Europe, and they're expanding pretty fast. They're currently building additional factories. When those factories are completed, they're expecting 600,000 units per year, and their research and development continues to be really strong. They just recently unveiled that they have a supercharging station. This supercharging station can take you from 10% to 80% charge in 12 minutes. And the final stock is Fintech, ticker TIGR. What I like about Fintech is that they're increasing their users. In Q3, they saw an 81% increase in customer accounts year over year. Chinese citizens are also getting into equities. Their primary wealth is currently in real estate. And again, with the rising middle class, people are going to have more disposable income to spend, and they're going to invest their money. Fintech also has international exposure, especially in Asia. For example, they're currently in Singapore, and they're trying to build up that market really fast. And not too long ago, they got approved to operate in Hong Kong. What I like about Fintech is the future of the fintech industry. The global fintech industry is growing to hundreds of billions of dollars. I've seen different reports range from $190 to $324 billion by 2025. There you have it, everyone. These are 10 Chinese growth stocks I'm targeting heavily for the years to come. I believe in these companies, and especially at these prices, I've been dollar cost averaging over many months to build these positions up. Like I said earlier, there are a lot of other Chinese stocks not listed that I think are really great, such as NetEase, Pinduoduo, and Li Auto. I would love to hear what you have to say. Are you invested in these stocks? Are there other Chinese stocks that you prefer more? If you like this content, please give it a thumbs up and subscribe. As always, thank you for tuning in, stay safe, and I will see you all next time.